Actually, seen on the long term, it's bad times because we see increasing numbers and intensities of natural disasters, weather-related disasters. Actually, this year, 2014, has been quite benign. No real big losses by now, and but we have a lot of big events like just the typhoon which has hit the Philippines. So it's a year with lower than average losses, but still intense events.
When people talk about insurance for extreme weather events, I mean, many people have their own house insurance, contents insurance, but when you're talking about something so big as a typhoon hitting a city, what kind of insurance are you actually talking about? Can you perhaps explain that for people back at home or who are kind of wondering how you insure, I don't know, London against some extreme weather event?
You're right. We have to distinguish between the industrialized countries where everybody has access to insurance and most of the people can buy insurance, they can afford it, and the people in developing countries. There are no developed insurance markets there, there is no history of insurance, and people don't really have the money to pay for a risk-adequate premium. So they cannot insure themselves. After big and severe weather events, they don't have any money which can help them to get back on their feet. There is no reliable mechanism. There's donor money, which once in a while or sometimes comes, but it's not a reliable source of financing.
But I mean, when I bought a house, there was something in the contract about flood risk, and you had a survey done, and they checked out whether you were in danger of being flooded, and the insurance company also checked whether you were 50 meters. But who on earth is going to insure anyone who lives on the coast of the Philippines? Why would you even, if you're an insurance company, you have a business model, how on earth is that going to work?
Yeah, certainly the premium will be relatively high, and it will be higher the closer you have your house to the beach. But I think this is also an important part of insurance, that we give risks a price tag. We tell people in the industrialized countries this should work. We tell people by the insurance premium how dangerous the place is they have chosen. And this could give incentives to perhaps choose a different place, a safer place. On the long term, will bring down the costs for the society. In the developing countries, where people already are living in these places, we have to find solutions to help them, to give them at least some money and quick money after an event. And most of the new insurance products, microinsurance, allow the payout within 14 days after the event. So this allows people to repair their roofs, their houses, buy new seeds if they are farmers, to start business again. And actually MCI, the Munich Climate Insurance Initiative, wants to implement such mechanisms.
And so if you're talking about high premiums, is there a debate about getting wealthier countries to pay those premiums for smaller countries? I mean, how does this whole debate over climate compensation and loss and damage, how does that financially plug into insurance?
You're completely right, and this is why we are here at the World Climate Summit, and we think we only can organize it under the roof of the United Framework Convention on Climate Change, because there some money will be available. The Green Climate Fund has just been filled up with almost 10 billion US dollars, and this money can be used for different adaptation processes, also mitigation, but also some of the money could be taken to implement these insurance mechanisms, but also to subsidize the premiums for the poor people in the poor countries.
And just finally, can you give me a sense about where these kind of insurance schemes are working already? I mean, there has been a lot of talk in the UK of a Caribbean insurance scheme that the UK delegates seem to talk about a lot. Give us a sense about where these kind of larger insurance schemes are already working.
In the Caribbean, there's the Caribbean Risk Insurance Facility, which pools the sovereign risks of most of the island states there. And in the Caribbean, we as MCI have started pilot projects on Jamaica, St. Lucia and Grenada to implement some microinsurance products, a livelihood protection policy for the poor farmers, for example, which pays out quickly and gives them at least some money to allow to get back into business after a big event. Actually, we had a payout already. In Christmas last year, there has been a big flood on St. Lucia, and the first beneficiary, the first insured people received some money, and this certainly helps us to get more of this policy out. And on the long term, and this is why the governments of these island states are supporting this, it helps the state budgets to level out the high volatility because if you look back in 2004 in Grenada, a hurricane has created losses 4 times the GDP of this country.